Hi, my name is Colin Fain. I'm the CEO of Agronometrics, and I have the pleasure of talking to you today about the Chinese market. And I'm going to piggyback off of an article that Sarah wrote for us, looking at the Chinese market, where she did an interview with two really interesting participants with Michael Oates, the managing director of Hey Grow China, and Huan Zhang, the founder of Twinkle Starberry. So, from their insights, we have a couple quotable statistics. And I'm not going to dive too much into the article. I definitely encourage you to read it. If you're not a subscriber to the Global Trade Data service, then by the time this video is made available, you will also have access to the article, and I'll link that down in the description. So, one of the things they talk about is the growth rate for the Chinese market, and that they quote at about 40% year on year. We're going to go look at that in the statistics later on, but that is an impressive level of growth. So there's a lot of consequences to that growth. I think a really interesting quote is you have people who typically invest in tech or real estate who effectively have seen a spreadsheet that says their returns for substrate blueberries is higher than, say, real estate, and they park liquidity there. So there's a lot of money going into blueberries in China and blueberry production in China specifically, especially considering that the Chinese economy is not burning as fast as it has in previous years. And this is going to mean a couple things. This is not a unheard of situation in other markets. In Peru, the same things happen. In Chile, the same things happen. In pretty much every growing region in the US or even more developed regions, we've seen the same thing. Like, people get excited about blueberries, they throw money into it, particularly before they realize how difficult it is. I mean, I've been in this industry for the better part of, actually, I don't know, more than a decade now. And every conference you go to, especially when you talk to the production guys, like, it is amazing the amount of detail that goes into every single step of the supply chain to get a blueberry from the field. I mean, to even growing the blueberries in the field to the end consumer. And anybody in this industry can, I'm sure, attest to that. So yeah, the market has to develop and evolve. One of the potential new markets for Chinese produced blueberries is exports. We're going to look at that here in a little bit, where we've seen a gigantic increase in the volumes exported and at very good prices. Again, we'll dive into that in a little bit. And I think it's really interesting how Sarah put together the narrative. She looks at, like, a lot of the individual variables that are affecting, like, the benefits and the challenges that Chinese blueberry production has, and kind of wraps up with, what will the next 5 years look like. And here, what they're expecting, or what they're looking out for, is the industry to mature, which means margins will become tighter, and those companies that aren't professionally producing will have a harder time making those incredible profits, which means that we're going to see people exit the markets, and by extent, more consolidation. There's a lot more insights there. I definitely encourage you to go check out the article. I just touched on a couple of them. But I wanted to go and take into context this information and look at the global trade data with it. So here we have the information we make available for China. And it's the same format that we saw before. So we looked at Peru, we looked at the US, now we're looking at China. We got the last 18 months up here, the last 10 years, and then what this season looks like compared to the previous 4 years. And so, going back to that statistic of 40% growth, we can see that the market has definitely been growing quickly. So in the last 6 years, we've gone from a bit under 10,000 metric tons to a bit over 40,000 metric tons. So the market has more than quadrupled in this period of time. I actually ran the statistics because I like numbers, and we did see a 45% increase from 2021 to 2022 till 2019. There was also a 40% increase, and for 2017. So that statistic, at least based on the historical data, is holding. This is in volumes. Will this be repeated this year? The main exporter for blueberries to China is Peru. And there's been a whole lot of coverage on all the issues that Peru's having with production. I'm not sure if this will hold necessarily for this year, at least not in volume. What we are seeing with the latest data that was made available on, and this is kind of like I'm speaking towards the end of November, so the data for October will be released next week. So I'm a bit, ahead of myself, I guess. But the the latest data for September, which is right at the beginning of the season, shows a considerable decrease on the volumes that Peru sent last year. And we get to see in the pricing, there is a considerable increase. So in September, at the very least, the declared import price was $9.44 compared to $8.24 the year before. That said, and given this incredible increase in volume that we've seen over the last couple of years, I think a striking feature of the Chinese market is how consistent the prices have been. So they have been going down as the volumes have grown. But again, the market quadrupled in this space of time. So we've gone from an average of $8.94 in 2016 to where Peru really came in hot and heavy, as it were. And we're seeing $7.30, $7.20. And even with the 45% growth that we saw last year, that took the price from $7.20 to $7.14. So that kind of tells me as an analyst that China is hungry for this fruit. If they can handle that much of an increase in volume with limited disruptions to price, that is a considerable increase in demand. And so I do believe that the Chinese market will continue to grow. I'm not sure if the economic slowdown will have an effect or not. What we saw from the article that Sarah wrote is that, at least right now, or in the eyes of the people that were interviewed for it, that is not what we're seeing. So, I mean, we're right now doing a post-mortem of the market. It will be interesting to see how this continues to evolve and develop as we get more information going forward. The other point that I wanted to touch on was the export market data. And this is really interesting because of this huge bump. And I say huge bump because it's something we've never seen before. So we'll look at what the export data from China looked like before. And we're sending, at the height of the month, 40 metric tons. So that's like not volume. This is mostly volumes going to Russia at $5, $6, or at $7, $8 a kilo, give or take. We're going to look at that here in a little bit. And then 2023 comes along, and this is completely reshaping the landscape. So in April of 2023, China exported 210 metric tons. Again, not like groundbreaking volumes, but 210 metric tons in April is more than they have exported in all of 2022 put together. So basically, what they've been able to do this year is increase their exports by ninefold. So this is a brand new development. Not only that, this is a brand new market. So the pricing that we're able to see for these exports are very attractive as well. And again, traditionally, the export market goes to Russia, maybe some neighboring countries like Vietnam. but the pricing for this fruit is not super attractive. So we're going to take it away. We're really interested in the new markets that are fetching considerably higher pricing. And here we get to see that in March, kind of right at the beginning of the Chinese season, the export value is between 16 and 13 for Hong Kong and Singapore. In April, the month that we just looked at, which is pretty much the height of the season, you're still getting between 11 and 13 dollars per kilo. That is a very good price. That means that this is really high quality fruit that's being exported, and it's able to fetch this price. Um, I think this is also, like, from a market analysis standpoint, the first objective measure of pricing that we've been able to see for the Chinese market for the fruit that's produced in China. Obviously, this is being exported. This is the declared export price. It's fruit that's going for other places that are not China. But this has to compete with the Chinese market. So the Chinese market has to be at least this high, or slightly below this, to be able to have this be the export price. That's a bit combobbled. But usually there's a relationship between the export price and the market price. That's kind of what I'm getting at. And the fact that these prices are that high, that is kind of helping explain what Sarah was talking about in the article, where you're seeing these really high returns on production. So that's what I want to show. Thank you very much for joining me on this video. And I'm really hoping that this one was shorter than the last one. I don't have a clock with me, but well, we're going to find out.